Hey guys, Dean here in Istanbul today, and we're going to be talking about Bitcoin and cryptocurrency for beginners, and basically a guide on how you can first of all start to invest in it and also understand the basics and fundamentals of it. This is going to be a guide running through what it is, what the different types of coins there are, and the best ways to get invested and stay secure and safe when doing so. This is a guide which I've been wanting to do for a while, so strap in and buckle in and get ready to learn all about cryptocurrency. So Bitcoin and crypto is growing every single year since its inception, always seems to be going up. If you haven't already got invested and you have a fear of missing out, today is better than tomorrow to get started. In this video, I'm basically going to show you how to get invested into Bitcoin and cryptocurrency in general for beginners, covering the main popular coins and the methods to invest from step zero. Disclaimer though, this video is for educational purposes only. I am not any kind of financial advisor, so don't take this as particular professional financial advice. This is based off my own experience, and although everything has been very finely researched and fact-checked, it's important to get advice and take into account your particular financial situation. So what is cryptocurrency, which is the first thing? So if you're a beginner, basically cryptocurrency is a digital form of payment which is separate from the standard fiat forms of payment. What am I talking about? Well, fiat is basically the standard term for anything which is mainly non-crypto. We're referring to things like the Great British Pound or the US dollar, for an example. That would be fiat currency. This digital currency comes in the form of digital cryptocurrency coins. These different coins, with the most popular one being Bitcoin, are basically what we use to invest in. So you need to actually exchange standard money, aka fiat currency, in order to actually obtain these, which is done on something called an exchange. You do this to obtain Bitcoin or other similar cryptocurrency forms of coins by investing in them and exchanging them for real world money. These coins basically are built upon a technology called the blockchain, which is a decentralized technology which is spread across a huge diverse network of computers and machines across the world, which verify all of the payments ingoing and outgoing, relaying information and basically managing all the data and transactional info. The main appeal to crypto is basically the security and how open it is for everyone actually to access and use it, and the anonymity factor. We'll get into all of these pros and cons a little bit later. Bitcoin was originally conceptualized and created by an individual or a group. Nobody's 100% sure, there's a lot of conspiracies behind it, calling themselves Satoshi Nakamoto. It's a sound currency which is compared to gold with a very limited supply, and this would be the future of the digital age as we know it. Cryptocurrencies are basically digital assets that you can hold, trade or exchange to buy for goods on a 24/7 open market, making them pretty lucrative and powerful to use. So why is cryptocurrency so powerful in general, which we've just mentioned? Because crypto is entirely decentralized and independent, and it's completely unregulated by national banks for the most part, which is giving the common person a lot of power, more anonymity, and less regulation on their spendings and holdings, which is pretty important to a lot of people. You can use crypto anonymously unless you share your private wallet address, which obviously would let people know that that's your particular address, and then people can see the amount of money that you have, etc. But for the most part, if you keep that private, it's a pretty private way of holding your money. Unless you actually share this, nobody will actually know that it belongs to you in particular, offering a little bit more privacy and also hiding some of your funds from maybe friends or people that you don't really want to know that you're too rich. It's also growing every single year at very high rates, which kind of offers a very high risk to high reward ratio and promises far greater returns than any kind of basic savings account, which we know at this point is pretty detrimental to even bother using, or even stocks and shares. Although I'm still interested in stocks and shares, I have actually pulled my stocks currently to actually get into the crypto space a little bit more closer. But there is more risks that come with this, so I'd advise watching this video and doing additional research before making a move like that. Transactions are also much quicker usually in crypto. For an example, usually you must wait for the asset to receive multiple confirmations on the blockchain before being transferred, which can take some time. However, we can actually think of this as a much faster way than some other payments. For an example, wire payments or similar style bank transfers, which can sometimes take anywhere up to 2 to 4 weeks to actually wait for, especially international payments, which take a very long time. If I was to send someone money internationally versus through a wire transfer, it would take them a really long time. This is something which I did did a few months back to China and they didn't even receive the payment. Whereas before China actually did outlaw cryptocurrency, I could have actually sent them a crypto payment and they would have got it instantly. You can basically globally transfer cryptocurrency coins across the world in very limited or no time at all in comparison, without limitations or additional fees. For an example, wire transfers with international banks do have a fee on top of them, which is usually a flat fee that you have to pay to transfer. Cryptocurrency also offers a level of privacy and anonymity from government bodies and agencies to protect your digital assets and digital footprint and financial history, covering transactions and kind of shrouding them a little bit for those who care very highly about their data. For those not committing any negative or legal acts and find this just generally appealing in terms of strictly privacy purposes, this is pretty useful for them too. Crypto offers financial freedom for the general population and theoretically allows you to carry a Swiss bank account in your pocket if you want to think of it in that manner, or on your laptop for an example if that's how you trade. Offering a pretty powerful resource to exchange, trade and sell that has the potential to always rise in value and offer a sound return, an alternative method to pay with. With over 7 billion people unbanked around the world, crypto can offer a pretty powerful method or solution of payment and virtual banking for some of these people that can still actually access the internet. The space is ever growing and it's a great investment opportunity with many different coins coming into the picture every month and annually. The space is ever growing and it only seems to actually be rising and going up constantly, making it more of a movement, not just really a form of currency. Crypto also makes for higher diversity across your investment portfolio, and it also has a better track record of retaining its value or rising in profits, and it's a very lucrative and powerful investment to hold to prevent losses due to inflation and the depreciation of standard fiat currency. For an example, if I have some Ethereum right now in my wallet and I hold that in my wallet, it has the potential to raise in value and be worth more in Great British Pound than it was yesterday. Whereas if I transfer that to my bank, it's going to hold the exact same value, and if it stays in my bank year by year, it's going to depreciate in value. Holding it inside a wallet actually helps to prevent inflation and its negative effects. So what's the risks of Bitcoin and cryptocurrency in general? Let's go into the negative side of things in such a way. Now, you know what cryptocurrency and Bitcoin is and all the positives and pros which we've just covered and gone over in a blanket statement, but let's cover some potential negatives to be entirely subjective instead of just looking at the good side. So the first thing is crypto is very highly volatile. Although the top coins like Bitcoin and Ethereum always recover and annually seem to always raise in value, many of the smaller coins or so-called altcoins, which we're going to mention a little bit more, sometimes completely fail or are subject to so-called scams, which are pump and dumps. So basically they will create a brand new coin to make a quick profit, which is usually promoted through influencers or people with social media influence, and then it's basically abandoned and it loses its value completely, leaving people out of pocket who chose to invest in it. It's advised to carefully choose which coins you want to buy or invest in for this purpose and use as a currency. I'd recommend just to get started with Bitcoin because it's the one that everyone seems to use and it's a coin which has been mostly stable. And also Ethereum is pretty cool too, which are mostly stable and lucrative, but we'll get into this more later, especially with the high popularity behind the NFT movement recently too. That makes Ethereum much more powerful than it initially was. Crypto does have a dark side though in the black market and illegal activity, which is something which we can't really ignore. Although it now only makes up a very small portion of users and the activity behind crypto with how many people are actually getting into it, crypto is used in criminal activity on the deep web or dark web, which is something which is used to purchase illegal items or commit criminal acts, which gives it a bad rap. Although as long as you stay away from this in particular, personally, it doesn't really affect your investment and it's something you can kind of ignore in the background. One huge big downfall though is no refunds. If you use a centralized payment operator like PayPal for an example, you can usually claim your money back if you get scammed or lose it in some kind of insidious manner. But with crypto, there's no support or 24/7 aid or any kind of company behind it, meaning if you get hacked or fraudulently scammed and you send a transaction, don't expect to get it back. You are in charge solely of your security and assets and which payments you choose to make with crypto, making it a little bit potentially dangerous for people who are completely new to it. Crypto is also unregulated, which can be a positive, but it can also be a negative. It's so diverse and huge, making it nearly impossible for centralized agencies and countries and governments to regulate and contain it. Although obviously recently there have been efforts to do so. This means it's mostly completely unbacked and it's subject to the space of cyber hacking and tampering. You have to be careful also to not get viruses on your computer and make sure generally that the security on your assets is high, which we'll be covering a little bit later on what steps you can take to actually improve this. Crypto is also very complex, and without your research, which has been done very finely, and videos like this to actually learn more about it, it can be a challenge for everyone to understand and comprehend, especially for people which are uninitiated with it. But with the right information, if done properly, it can be very powerful and also pretty interesting as a hobby to actually get into too. Another con is the high consumption of energy. You don't really need to personally worry about this unless you choose to actually get into crypto mining, which is in basic terms using your computer's power to solve high-tech math equations through algorithms to acquire free cryptocurrency, although the amount that you actually get in return is very small nowadays, especially with coins like Ethereum basically trying to phase out miners. This uses a large amount of your house's power and costs, so it's something you need to consider because usually the profit is not as much as the power consumption and costs you have to pay for it unless you're running a really big operation. This is a huge contribution to carbon footprints, and if that's something that's very meaningful to you, then this is obviously a problem. But people just exchanging or holding the coins and being on the network in general and not participating in mining aren't really contributing to this, or at least not directly. Is cryptocurrency legal? Cryptocurrency is mostly globally legal, although you can research based on your country specifically and find the laws surrounding it. For an example, Bitcoin and crypto was recently outlawed in China, and some of the countries imposed sanctions upon it, although some third world countries and developing ones have actually adopted it as a main payment source, which is pretty interesting in its development. Although the majority of the Western world and rest of the globe is legal, but also unregulated, like we mentioned before. So what type of cryptocurrency coins are there out there? Well, there's thousands of coins available and they constantly keep cropping up, some becoming successful and some just completely plundering. The main thing that we have to be concerned about though are the rare and main big players. For example, we have Bitcoin, which is the main primary one, and Ethereum too, which is also pretty important. Although there are more valuable coins such as Binance Coin, Cardano, Tether, Solana, XRP, USDT, and more. These are what are called so-called altcoins. Altcoins are alternative coins to the main coins listed before. That's the main basic way of describing it. Now, the main altcoin which I'd actually recommend as an investment is Monero, which I will cover a little bit later. There's also so-called meme coins like Dogecoin and Shiba Inu, which are based off memes off the internet, but they're solely hype driven, and although you might see some returns on investment when there's huge hype trains behind them, I wouldn't really recommend them as a long-term serious investment. Perhaps you should avoid these because they're even more volatile than the other cryptocurrency coins. There's also privacy coins, namely the altcoin which I mentioned, Monero, so we're going to cover privacy coins and what they are. What are privacy coins? Well, privacy coins are basically altcoins or types of cryptocurrency coins which have privacy in mind. For an example, holding your assets, so people don't know how much that you're holding in your wallet, for an example. Privacy coins are cryptocurrency coins that use stealth addresses to shroud transaction location points to create new addresses in order to make every single crypto transaction obscured on the blockchain, shrouding identities of wallets the crypto was sent from and received from, and further protecting users' privacy. Monero, aka XMR, is basically the most popular and secure untraceable cryptocurrency coin that keeps users' anonymity completely protected. There's also technology called ring addresses, which connect multiple wallets together, or wallet addresses, as to not make it clear which point that the transaction was sent from or received. This is a technical utility which Monero utilizes. Although some criminals may use privacy coins for the purposes listed before, they're pretty lucrative for the average person, especially people that care about privacy and being tracked. If you want anonymity, then privacy coins are probably things that you should invest in. For example, if you're heavily invested in Bitcoin, it would be a good idea to have some holdings in Monero for this reason. This also makes things like hiding your wealth a lot easier, which is something everyone has the right to do, especially if rich people have holdings in crypto and they don't want to live a larger larger-than-life lifestyle or want attention for their assets. Privacy coins include Monero, Dash, Verge, and Zcash. I know some people which have a ton of money in crypto, and they do have some holdings in Monero in order to hide how much they have. I personally do have some investment in Monero, although I don't really have a high proportion in it. So how do you buy cryptocurrency and coins in general? Well, basically, first off, you'll need to sign up for some kind of coin exchange. Just like in the case of stocks and shares on stockbrokers, you'll usually need to provide some kind of ID in order to get verified. This could be in the form of a passport or a driver's license to verify your identity and make sure you're not a bad actor or stealing someone else's identity. This is also a legality that exchanges must verify people's identities, as probably a way for the government to keep track of certain things and data to be stored. Although there are other methods than using an exchange, this is the main primary form of exchanging and obtaining crypto. This is the downside of an exchange for people using crypto for privacy and the reasons initially stated. Although there's some sites that you can actually buy coins directly from without actually verifying your identity, and you can find these online doing a deep dive in a search engine like Google, for an example. Now, the main exchanges will let you use different forms of payment operators to obtain and trade with. For an example, you can use a debit card or some kind of bank transfer to top up your account with normal fiat currency like the US dollar, Great British pounds, or similar currencies in order to purchase crypto. You can purchase usually the main coins directly from the exchange themselves or the corporation behind the exchange, with many exchanges having an open market where you can buy altcoins or lesser known coins, either with the fiat currency you topped up via your card or by exchanging a different coin for them. For an example, when I buy Monero, I buy it on Binance and I trade Bitcoin for Monero directly on the open market. This is the reason I recommend Binance as an exchange to you, because you can use the app or the website and it has a full-on open market. This is the biggest exchange on the internet, and you can either buy directly from them, and it has a lot of security measures to make it a little bit more secure. Coinbase is also a pretty trusted corporation which you can use, so I'd recommend that probably as option 2. Next, you'll need to make a wallet. So I've made a lot of notes about this, so I will be referring a little bit more to the script for this section because it's a really important section where security needs to be kept in mind and everything needs to be done the right way. So you'll need to make a wallet, and basically a wallet is a digital way of storing your Bitcoin or crypto on to track its value and to make purchases and receive currency directly. This is where you'll transfer your coins bought on an exchange to, or buy or receive crypto. You may hear the phrase cold wallet or hot wallet and wonder what they exactly mean. Well, this is basically how they connect to the internet. So hot wallets connect to the internet, but they're less secure and more highly accessible and vulnerable, although they're a lot more user friendly. Whereas cold wallets are offline based wallets for cold storage, which are always the more safer option as they don't tend to connect to the internet. Now, wallets do come in different forms. So first of all, we have mobile wallets, which are usually in the form of some kind of mobile app. Online wallets that connect to the internet via either a website or through a web browser. For an example, wallets on exchanges. When you make an exchange account, it has a wallet built directly into the exchange, although this is not really where you want to store all of your money for security purposes, but it's just there for the reason of transferring. Wallets on exchanges usually have great security measures, but they're the subject to risk of cyber attacks. So it's best to transfer your crypto funds to a different wallet, such as an offline wallet or at least one on your computer. This is a lot more secure than mobile or web exchange wallets if you have a software wallet on your computer. You can sometimes use desktop wallets in offline mode, although most do connect to the internet to connect to the blockchain, and many of them actually have built-in exchanges into the desktop software, so you can actually buy and transfer coins while you're using your wallet. Lastly, there's also hardware wallets too, that sometimes come in the form of some kind of USB device or a digital device like the Ledger, which is a very popular device which doesn't store its private keys online, making it a lot safer, although it adds another layer of security that you need to verify or validate as an extra step before making any kind of transaction or purchase. These can be a little bit dangerous, as I do have a friend who uses one of these devices, and he did tell me that if he gets the phrase wrong 2 or 3 times on the device, it self-destructs and he basically loses all his crypto, which was a very high amount. So I'm not sure about the truth behind this or if this is a standard thing, but you need to be very careful with these offline ledgers. Now you may wonder, which wallet should I actually get? Well, wallets differ completely in relation to the actual coin you want to hold and trade. Now there are some multi-wallet desktop apps out there that let you have wallets for different coins, although I'm not really sure how trustworthy they are or which ones are good. There's really popular and great wallets for each different coin. So for example, I'd recommend MetaMask for Ethereum, which is a desktop or digital wallet which is built into your web browser. And I believe you can get a mobile app for it. That's really good. That's what I use for Ethereum and what most people use for Ethereum. This is really good because it hooks into the API of many websites, making for trading very easily with Ethereum, and also is used primarily for NFTs too. There's also Exodus, which is a desktop wallet which is for Bitcoin, or just generally a ledger device for more secure Bitcoin cold storage. As for Monero, which I mentioned earlier, the Monero GUI software is the best one, and it's the officially promoted one for the software. Now, one last thing to mention in this section, which is really important, is especially if you're new to this, is you will have public and private keys when you make a new wallet. Now you can make a note of these, but it's important to keep your private keys safe and secured in a place where only you know or can read, and never share it with anyone, even people you trust, because basically if someone uses this phrase, they can actually recover your whole wallet, and with this, all of your crypto with it, making it extremely dangerous, and you can lose all the assets which you invested in. This is also why if you copy and paste this and then have a virus which is a keylogger and tracks that you copy and pasted the code, they could also use the private key and paste it in and steal all your assets too. This is important why you need to keep viruses off your PC and make sure your device is secure. Once your funds are gone, they're completely gone, so you need to remember that. There's also public keys too, which are used to verify a transaction and prove the ownership of the actual private key. So next up, how much should you actually invest in crypto? It's important to first consider your financial background and situation when investing in anything. Everything is personal and you can't really compare yourself to other people, especially the big players that have already made money. Like I said before, I do know people who have made big profits off crypto, and of course their investments mean a lot different to mine. For an example, them investing $1,000 into something is completely risk-free and it doesn't really mean much to them, whereas that has more of a meaning and it seems like a much bigger figure to someone like me that's only been in it for around 2 years. It's up to you to decide your investment allocations, although as with anything, it should be money that you're okay to part with or completely lose. As with investing in stocks, for an example. This is money that will not put you in any kind of financial dip or bankruptcy if you do tend to lose it. Don't risk your full livelihood just for the promise of a success. Crypto investing is high risk, high reward. It's not considered as gambling or nearly as dangerous, but don't make stupid choices and invest all your life savings for obvious reasons. Perhaps consider investing maybe 5 or 10% of your portfolio or earnings into crypto and work from there based on your situation. Crypto doesn't really typically pay dividends too, just like stocks, so it doesn't really seem to be too much of a lucrative investment in terms of passive steady returns like stocks, unless you're invested in a particular coin which rewards you with dividends for holding it, which there is actually a lot out there and some apps which support this. I do have a friend who does this and he makes a very healthy income on dividends by holding a specific crypto coin. Take time to plan how much money that you comfortably want to invest into it. This should be an amount or percentage each month that you can afford to lose, and consider consulting some kind of financial advisor if you can't calculate your personal investment allowance. Most financial advisors don't really understand investing in crypto just yet, but they will definitely understand with preparing you with some kind of percentage or amount that is safe for you to invest in each month. If you're investing in stocks and shares though, you may need to share crypto across this allowance or percentage allocation of your portfolio's investment allowance each month. Which cryptocurrency should you invest in? It's always safer to consider investing in the main coins, which I previously mentioned before, and perhaps also buying a little amount of Bitcoin every month would just be a good starting point for a rookie, and just holding it long term. If you invest what you can afford to lose, this also makes it much easier to hold it long term instead of panicking and withdrawing it all and losing the potential long term rewards. This is really cool because then it will grow annually and you'll see some kind of bonus bonus or reward from the initial amount you put into it. Researching which coins are going up in value is also something which you should keep track with and do a little practice with. This lets you learn the open market and kind of understand what things are actually going on. I'd recommend using Coinmarketcap.com for this, which is a really strong website which basically lets you learn everything as it shows all the metrics on each coin and the current happenings and the price spikes and dips as they happen. This shows basically all coins on the blockchain, and it's a really valuable website as a resource to learn and use if you want to invest in crypto seriously. This lets you track the current value of coins which you're invested in and look at the price trends over a series of months or years to see their long-term performance. So the last section which I want to cover is how do you keep your cryptocurrency safe? This is a super important section because you could invest quite a lot and then just completely lose it due to personal error, for an example. So let's jump into it. This is another very careful, steady section we need to go over, so I'm going to be closely referring to my notes here. Now, there's many ways to actually be secure in the crypto space since it's all digital, but you do need to be careful also for this reason. When trading on digital exchanges, it's extremely important to follow the security steps provided because obviously exchanges bring more risk than holding funds offline or just on your desktop. It's recommended always to transfer your coins directly to your wallet off-site because if you hold them on-site in their wallet and store them on the exchange, it's really risky. Although uncommon, every few years there does seem to be a few serious cyber attacks causing losses in millions of crypto across the whole user base. This is really serious, and for the most part your money probably won't be restored if you're a victim of one of these attacks. As for your wallet, you should keep your private keys private and never share them. You can use a desktop wallet or offline wallet for security, and consider using a ledger or cold wallet if you care about the maximum security. There's also a few things I recommend primarily for the exchange itself. I'd first recommend to add SMS factor authentication, which basically sends you a code via text to verify your account and log in. This is something which I do on Binance.com. This can be a little bit annoying because as I'm traveling, I do have multiple SIM cards across different countries which are used for mobile data and texting on the mobile phone, so I have to switch to my original SIM card constantly if I want to do any crypto transactions, but I know that my account is more secure for this. I'd also recommend adding email code authentication, which is the same thing, it's just a secondary code which you get via email for a confirmation, and also mobile code confirmation too, which is basically in the form of an authenticator app like Google Authenticator on the phone. So you'll get an SMS text and you'll have to use the code from the mobile app also. This is for your crypto exchange accounts, and they're extra layers of security to get into your account and make payments or transactions, protecting things like your debit card which may be saved on there, and also the crypto funds from people transferring them. If someone hacks your email, they'll also need your phone to then get into your account. So if you just have an email code on, it's not as safe as if you use all 2 or 3 methods of extra layers of protection on your exchange account. You can also add Google Authenticator like I mentioned before, especially on Binance, as a phone app as an extra security measure too on most exchanges also. I believe you can also do this on Coinbase, but I can't really guarantee this because I don't use it anymore. The next thing is don't click shady links or links which get sent to you via email, which is kind of obvious at this stage, but these could be phishing links or links to viruses like keyloggers which will steal all your information. Emails regarding crypto should also not be trusted, and you should verify the site which they're actually coming from and verify any sites that you're logging into are legit, and check positive reviews for certain websites which you wish to use on websites like Trustpilot.com, which have peer-to-peer shared reviews to verify if a website's legit or not. You could also use a fresh new laptop to do your crypto trading just like I do, and make sure not to download anything onto it. I only really tend to download Steam games and trusted open source software on here, so I know that most of my crypto will be safe. On this device, perhaps you only install trusted mainstream software like I mentioned before, or you only install the core software which you need to, and you don't install anything else. You could also keep this offline, providing that you can still connect to your wallet, and this also prevents any downloads or connection to any servers if you have a virus, for an example. Be extra careful with anything you're downloading, especially if you're downloading things like torrents, for an example, which could be packaged with viruses. Make sure to keep your computer completely uncompromised, and if you have to, do routine virus scans and get a good quality antivirus with web protection too, which could be important. Or installing something like a privacy plugin for Google Chrome or your web browser, which can block the tracking of cookies and shady links or pop-ups. Pop-up blockers are basically a must-have because they just get really annoying. And that's basically it. That's the beginner's guide to cryptocurrency, what it is, how to invest, and just basically to generally understand and comprehend it. Now, I'd advise to invest carefully and re-go over all the information in this video again and do any additional research that you need to. Also, feel free to ask any questions below about any coins that I mentioned, any methods of purchase I mentioned, and any additional questions which I either didn't cover or you don't understand. I'll try and reply to as many as possible to help you guys out. For more investment and financial information style content and general value from the channel, make sure to give the video a like and subscribe, and drop any questions as previously aforementioned down below if you need some kind of help or guidance. You can also offer any advice in the comments below if you're a seasoned investor or someone who has a lot of knowledge to help other people too. Thanks for watching.